I think the question on the success on AVs is it's not really binary at the moment, and it's still a very open-ended question whether Tesla really has the best technology, or the companies like GM that actually have vehicles running around San Francisco without test drivers in them anymore.
Lucid also declining since its SPAC debut in July. The stock heading lower since then. You can see the time frame there. The big spike earlier was when the SPAC acquisition was announced.
Well, I think it's going to be a really nice EV maker, auto manufacturer over time, and be very successful.
Hey, I'm Steven, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in today's video, I'm going to be reacting to some comments from a stock analyst who's recommending investors buy Lucid, expecting the stock to increase by 50% from where it is today. He also seems a little bit confused about how difficult production is, and seems to assume that Lucid are going to be a very successful automotive company despite the fact that they've delivered approximately 0 vehicles to customers to date. He further emphasizes his lack of understanding about technology, and in particular Tesla, by wondering out loud whether or not Tesla has any technological lead when it comes to autonomy. And finally, some really positive news from Lucid. They've officially achieved a 520-mile EPA range on the Lucid Air Dream Edition, so big round of applause to Lucid. We're going to talk about what this means and more, so let's get into the video. If you love crypto, stocks and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
And one sector that's still trying to charge up despite everything we've been describing, high fossil fuel prices, the big push by the administration towards clean energy and all the rest of it. Look at the EV stocks still lagging the market this year. Several key names, the S&P's up about 20%, Tesla's down 5%, Fisker's down about 10%, and Lordstown's down about 65%.
Now look, I'm not here to nitpick. I'm going to ignore the Tesla stock down 5% year to date, despite the on-screen graphics showing it's up 5% year to date. I don't care about that. But I do just want to point something out. The ridiculousness of CNBS grouping together these electric vehicle stocks as if Tesla, Fisker, and Fraudstown Motors are comparable. One of these companies has delivered vehicles to customers, Tesla. Fraudstown Motors issued a going concern notice recently, suggesting that they may not be able to stay in business. They desperately need to raise cash, otherwise they'll go bankrupt. By the way, I'm not making this shit up. And then they reiterated this going concern notice as well. They're in big trouble. And of course, Fisker have also delivered 0 vehicles to customers, same boat as Fraudstown Motors. Why is it that CNBS just decide that they're electric vehicle stocks and they're comparable? It's insanity to me.
Lucid also declining since its SPAC debut in July. The stock heading lower since then. You can see the time frame there. The big spike earlier was when the SPAC acquisition was announced. It's seeing a nice pop today, though, after BofA Global Research called it the Tesla/Ferrari of EV automakers. And John Murphy, who covers autos for Bank of America, is here with me now. John, welcome.
Thanks, Kelly. Thanks for having me.
So Lucid hasn't delivered any cars yet, correct? The last I saw, they had about 10,000 pre-orders. And from what I read, the most expensive version that they make has a range of like 500 miles on one charge. Is that right?
So I just want to chime in here once again and congratulate Lucid. This is a great result. 520-mile range on the Lucid Air Dream Edition costs about $180,000, so approximately double the price of a Tesla Model S long range, which has 405 or so miles of range. So incremental increase in range, massive increase in price, but also it's more of a luxury vehicle. The whole woolly mammoth pubes in the stitching of the seats and unicorn tears in the wiper fluid. So there's a few other reasons for this higher purchase price as well. But in either case, this is a great feat of engineering. It does show that Lucid have some engineering prowess. They're not just a pretender. Shout out to Nicola. I expect there's going to be a lot of discussion around this 520-mile range, so I'd like to talk about this in a little bit more detail. First of all, and just quickly, from an engineering point of view, there's a few factors behind this. Now keep in mind, purchase price for the Lucid Air Dream Edition about double that of a Model S long range, which means that Lucid has the luxury, no pun intended, of using different materials, lighter materials, because of the higher purchase price, which can contribute enormously to an increased range. Another component, the Lucid computer isn't doing anywhere near the amount of heavy lifting that Tesla is with its autopilot, navigator and autopilot, etc. The computer actually drains a huge amount of energy. And this isn't at all to take away from Lucid's engineering. This is a great feat nonetheless, but I just wanted to point that out. It's not really comparing apples to apples. Now, as far as I know, the Lucid Air Dream Edition has a 113 kilowatt hour battery pack. I don't know for sure, but this is the last that I heard. Tesla Model S long range around 100 kilowatt hours. But even so, it suggests that the Lucid vehicle is more efficient based on the size of the battery pack and the amount of range it can achieve. So well done to Lucid once again. Now, however, it is time to be practical and realistic. In my opinion, 500 miles of range is enormous overkill. Now, hey, don't get me wrong. 500 is better than 400. In most cases, it makes sense. More range is better, right? Okay, very few people will argue that fact. But let's think about this honestly. How many people on planet Earth have a bladder that could withstand going 500 miles without stopping for a rest? 0? Maybe a handful of genetic freaks, maybe? In my opinion, for most consumers, and please don't be that moron in the comments, I said most, not all. Most consumers out there, around 300 miles of range is more than enough for an electric vehicle. Some consumers, maybe you're talking 400 miles, maybe, but that's about it. Anything beyond that, in my opinion, is massive overkill for the vast majority of consumers out there. Certainly, some bragging rights come along with breaking the 500-mile barrier, but most people, in terms of practicality, it's not actually going to be utilized. Time for an analogy. We're going to talk about skin flutes just for a moment, and if you're not sure what I'm referring to, I'll explain when you're older. Now, let's be honest here. I think most guys watching would love to be able to brag to everybody who would listen about their 12-inch kidney rattler. There is just one problem. In practical terms, this may not necessarily fit most people's needs. And in practical terms, there is an enormous price to pay for these bragging rights. The analogy here with the Lucid Air Dream Edition, you're paying about twice what you would for a Model S long range for those extra miles, or in this case, maybe inches. Not every consumer, and please don't think about the use of that particular term here for too long, is actually willing or able to pay the price that comes along with this feat. In theory, a 520-mile ankle spanker is great, but if you can never actually make use of that full range, a little bit of a waste, isn't it? Of course, don't get me wrong, there are some consumers out there who'll take nothing short of an absolute meat club in terms of their electric vehicle range, and that's totally fine. But generally speaking, these consumers are outliers. When we're talking about the average consumer out in the market there's a happy medium that's going to satisfy most needs. Somewhere in that 300, maybe even 400 mile range will suit most consumers just fine. The point I'm making here is that when it comes to electric vehicle ranges, most consumers out there aren't seeking a vehicle that effectively has a third forearm. They just need something to do the job well, and not cause too much pain to the wallet, of course. And don't worry guys, there are some consumers out there who'll never need more than 200 miles of range to satisfy their needs, and some extreme outliers who won't even need 100 miles. So don't worry, you don't need to cry yourself to sleep. There's even a market for very short range EVs, but the point that I'm making is most consumers somewhere in that 300, 350 mile range is probably more than enough, and in fact much more than that, probably in most cases not even worth the price of admission. Did I really just spend 2 whole minutes talking about, you know what, let's pretend that didn't happen. Moving on.
Yeah, that's right. I mean, that's one of the key metrics is the miles per kilowatt hour. I think that's one of the things that Peter Rawlinson brings to the table, is sort of a new view of how you measure efficiency and productivity of the battery, but also the powertrain. So that 500 mile range, vehicle is sort of a testament to them being able to put up, 4.5 to 5 miles per kilowatt hour, where you have Tesla at 4 miles per kilowatt hour, and everybody else is at about 3 miles per kilowatt hour or less. So not only is it a high price vehicle, but it is a technologically advanced vehicle that will bleed into the other vehicles they offer over time.
And we've seen a lot of hype in the EV space, obviously, but the reason why people, yourself included, like this name is because the CEO did that work on the Tesla Model S, right?
Yeah, that's absolutely right. I mean, he was the chief engineer on the Model S, arguably through the entire program.
Now, I don't know the full story here. This point is contested by Elon, seeming to suggest that Peter Rawlinson had less to do with Model S engineering than is claimed. There were some documents floating around where Pete was shown as the chief engineer of Model S. Whether or not this is because he'd just taken on the role or he'd been in that role for a long time, I don't know. But in either case, Lucid have really been milking this fact in all the investor presentations. Tesla logos slapped everywhere from everyone that ever worked for Tesla for even 1 millisecond because, hey, why not? It lends some credibility. Nothing wrong with doing this, but it's certainly something they've lent heavily on.
So, as you look at these companies, they're early stage companies. So judging their success and viability, obviously we're financially modeling these companies, but you also have to take a leap of faith and a view on the management team and their experience and their ability to execute. We'll get a good view into that as we go to see the Arizona plant in about 2 weeks. We're really looking forward to seeing how the production ramp is really working here.
So obviously, we can't talk about any PE ratios yet for this name. The valuation being what it is one of the reasons why people have been concerned about the stock underperforming a little bit this year. Your $30 price objective is sort of a 3x EV to sales ratio, to put that in just some context for the rest of the space. But the real question that I'm interested in is, when you look at the valuation that Tesla commands and the technology it's working on under the hood for self-driving, whether or not it comes to fruition, is Lucid, do these companies have to play in that sort of high-end computing space in order to command Tesla-like valuations? Or will they otherwise be relegated to just another EV maker, even if it's a really nice one?
Well, I think it's going to be a really nice EV maker, auto manufacturer over time and be very successful.
Now, I'm not trying to be a jerk here, but me, dude. How can you possibly make this claim with a straight face? Lucid hasn't delivered a single vehicle to a single customer yet. They have no track record of execution whatsoever. They are at the very base of a Mount Everest-like climb to actually reach volume production without going bankrupt. And yes, I know they're sucking from the teat of the Saudi wealth fund. That's going to help, but there's no evidence to suggest that they're going to be successful. Now, I understand the comment about taking a leap of faith, but this is more than a leap. I've got to say, congratulations for having the balls to think that Lucid stock's going to grow 50+% from here. It's around $20 as I record this. He's got a $30 price target and is recommending investors buy this. But geez, man, that takes some serious courage considering there's no track record whatsoever, unless of course you're under the impression that production is easy, which in my opinion, it's not.
I think the question on the success on AVs is it's not really binary at the moment, and it's still a very open-ended question whether Tesla really has the best technology, or the companies like GM that actually have vehicles running around San Francisco without test drivers in them anymore. Are they really ahead?
I tried to give this guy a fair go, I really did, but he has outed himself as completely fucking clueless when it comes to both electric vehicles and, far more importantly, autonomy, which is going to have an outsized effect on the valuations of these companies. Sorry here, John, but dude, you really need to stop talking about this stuff until you do a little bit more homework. Probably not going to end well. And yes, I know how disrespectful that sounds, but hey, I don't care. Facts are facts. You got no idea what you were talking about. Oh, dude. Now look, I feel bad for this guy. Typical automotive analyst who suddenly gets thrown in an electric vehicle stock to cover and has to somehow understand these companies even though they're nothing like the internal combustion engine automotive companies he or she has been covering for decades. But see, the thing is, I'm not here to coddle or to make friends, just to spit facts. And in my obnoxious opinion, I personally believe that retail investors who blindly listen to these analysts who are now initiating coverage on electric vehicle companies of which they know literally nothing about are prone to lose colossal amounts of money because they trust these people. Oh, it's an analyst. Oh, automotive analyst. Yeah, this guy knows what he's talking about. So speaking of knowing what one is talking about, or perhaps not knowing what one is talking about, let's head over to tipranks.com and check out this guy's profile. Maybe we can see some ratings on other electric vehicle stocks. Of course, it's likely that his automotive stock picks are pretty decent overall because this is what he's been doing. This is his bread and butter. But when it comes to electric vehicles, does this guy have any clue whatsoever? Because these statements seem to suggest otherwise. Okay, so here we are. 4 and a bit stars. Could be worse. He's definitely no Gordon Johnson. Let's have a quick skim here and see if anything sort of stands out. Got a buy on Ferrari there, a sell on Lordstown Motors. That's a relatively good call there. Initiated coverage on Lucid, $30 price target. Got a buy on General Motors, 50% upside. Holy f***, dude, how high are you? He's got a buy on Ford as well. Okay, this will be a great one actually. Tesla, okay, of all the electric vehicle companies, hopefully there's been some coverage for a while on Tesla because this will be a great idea of how good his track record is in identifying potential, execution, etc. in the electric vehicle space. Let's have a click. Wind the clock back here just to be completely fair. He's been covering this stock since 2014, initiated with a sell. So far so good, and another sell and another sell and another sell and another sell. And by the way, this is where I point out I was buying literally the entire time he was recommending people sell the stock. Suddenly after Tesla stock more than doubles, he then suggests people hold. Then changes his tune briefly at $700, suggesting people buy, and now it's hold. Average profit on the stock minus 23.8%, and success rate 38%. Now, don't want to be too much of a dick here, but that's it. The best example of an electric vehicle stock, he completely missed the mark and got it absolutely wrong. I mean, it would have been much better if instead of sell for this entire half a decade period, he was suggesting people buy. But hey, nobody's perfect. I'm not going to hate here. Just wanted to point out, is this a stock analyst you really want to be listening to when talking about companies who haven't even delivered a single product to customers, when a company he's been covering since 2014? 7 years. He had a sell rating on for more than half a decade when they were actually delivering compelling, great, award-winning products to customers. Just asking the question. Now, just thinking out loud here, just kind of wondering to myself, maybe it's possible that John thought to himself, well, I fucked up on Tesla stock for like 7 years. I don't want to make that same mistake again with Lucid. Production is easy, so they should buy Lucid stock, right? Now, I don't know what the thought process was, if there was one. But it does seem a little bit strange to me that an analyst is willing to give a buy rating on a stock for a company that hasn't delivered a single vehicle to customers yet. Just seems a little bit strange to me, a little bit gutsy, a very ballsy move considering there's not really a track record of execution. And by the way, just to be fair, I personally think that Lucid could be successful if they can climb the mountain and actually execute well. I think they have some great engineering talent, and I also wish them all the best. But the thing is, I'm a skeptic. I need a company to prove themselves to me first. And until that point, I wait on the sidelines. Show me what you can do. Prove that you can execute. Prove that you can deliver. Prove that you can hit volume production. Then I'll see. After all, I prefer to invest, not gamble. And there is another point that I want to cover as well, because this is really important. Whether or not a company is successful, the stock price can be completely independent of their execution. We've seen this a million times over. Shout out to Lucid Stock, a great example of what was an obvious fraud, allegedly, in my own opinion. Do your own research. Blah, fucking blah, blah, blah. Obvious fraud, again, in my opinion. Yet investors bought the stock up to some ridiculous valuation because the bell curve is real. The same thing could happen in many other EV startups, whether or not they're ultimately successful or they go bankrupt. The stock price could do anything, and therefore these stock recommendations from stock analysts could also be very successful, even if the company ultimately ends up at a zero. I'm not here to hate, but I am here to ask the question how any analyst with a brain and integrity could possibly be recommending investors buy these stocks at this stage without any history of execution, knowing, at least hopefully knowing, otherwise holy shit dude, that reaching volume production is akin to climbing Mount Everest in your underwear with no food or water.
And that may mean that Lucid could be behind on the AV front and would need to spend or buy to catch up there. But I think the core platform of the vehicle itself is where Lucid is really going to succeed and really outstrip a lot of the competition, and where they'll be really successful. On the AV side, still a very open-ended question is who the winners are really going to be and what that really means over time.
Now, I know how obnoxious this is going to sound, but let me be clear. There is no question as to who has won the race to solve autonomy, who has the technological approach that will succeed, who has the data engine to actually accumulate enough instances to train the neural networks to get this job done. It is Tesla. This is obvious to anyone who has sufficient information. The only people who have questions have massive gaps in their knowledge.
Sure, and it's certainly far off, like you said, and I think the points about GM are extremely relevant here. I guess just a final question about batteries. How are they able to deliver that kind of range on a battery similarly sized to Tesla? Why shouldn't we expect Tesla and others to eventually catch up?
So there's a hyper focus on batteries in basically 100 kilowatt per hour cost going down over time and getting to $50 to $75 to break through and actually being cheaper than an ICE vehicle. But ultimately, there's also the powertrain and the efficiency of how you get that electricity to the wheels, and ultimately the aerodynamics of the vehicle. So that's one thing that I think Peter is very unique on, is saying, hey, listen, I can use a similar size battery and have a much longer range, or maybe actually have a smaller battery that's less expensive and have a similar range. And I think that the discussion here is going to morph outside of just the pure battery itself, get a lot more into the efficiency of the powertrain and the aerodynamics of the vehicle to help ease the pressure on battery advancements. And I think that's a really key point here for Lucid that people really need to understand. There's a whole lot more than just the battery at Lucid.
Got to give some credit there. That was a good final point there. There's a lot more to efficiency than just the battery itself, including powertrain, aerodynamics, blah, 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 blah. You guys and girls probably already understand this. But it just boggles the mind that there's stock analysts today who are willing to recommend people buy stocks like Lucid, suggesting 50% upside from where we are today, a $30 price target, when they've yet to deliver a single product to customers, let alone do the hard part of reaching volume production without going bankrupt in the process. Lucid has a higher market capitalization today than Tesla did in early 2019. Just think about that for a moment. Seriously, pause the video, let that one sink in. Lucid, without having delivered a single vehicle to a single customer, is worth more than Tesla was 2.5 years ago. Now, is it just me, or is that completely insane? Let me know what you guys think in the comments below. Is a 520-mile range practical and going to be utilized by most consumers, or is it purely for bragging rights? More importantly than that, what are your thoughts about Lucid stock and their market capitalization? Do you own Lucid stock? Do you think the valuation's insane? And do you think it's a little bit crazy for analysts to be recommending investors buy a stock in a company that hasn't actually delivered a single product to any customers? Or is that just me? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.